Let's get more reaction to Disney's results. Joining us now is longtime media executive and Fast Money friend, Tom Rogers. Always great to see you, Tom. What'd you make of the quarter so far?
Well, a lot we still don't know. A lot we need to know. But this bundling thing is big news. And it really underscores what a big deal it was to do the deal with Comcast that got them the rights to do bundling. Comcast had their hands around Disney's throat. I'm still not sure why they let them off. They didn't have to do that deal so quickly.
With Hulu, you mean?
What's that?
With Hulu.
With Hulu.
Yeah.
But by doing this with Hulu, effectively agreeing to pay for a third of Hulu, they got rights to be able to bundle now. And with that, they can put together a much more compelling package. We don't know the rest of the story here, though. With the right to get Hulu under their control, they got the right to take Hulu International, play the real game Netflix is playing, which is a big global game, which is where the big multiple hundreds of millions of subs lie. That is a totally different expense game than the one they announced in April. And we didn't hear what they're willing to invest for that, what the cost of that are going to be. That's going to change the whole break-even dynamic on the whole thing. The other thing we don't know yet is the decline of the traditional television business hasn't really bitten Disney yet in a big way. We just had reported from AT&T and Charter and Dish and Comcast the worst cord-cutting quarter ever. Terrible. And it only looks like that's going to accelerate. And even when you take into account the so-called skinny bundles of skinnier packages that people were taking, you still are looking at about a 3% rate decline going forward. When we got to 4% decline in traditional telephone service, we knew things were in trouble and it was going away. They've been able to cover that for the time being with rate increases in long-term contracts on ESPN and other things. But bottom line is, when you lose 20 million subs from the traditional TV business over the next 5 years that are getting between the Fox channels and the Disney channels 15, 16, 17 bucks, and you're making it up with $12.99, you got to do 25, 30 million channel subs on your streaming service at $12.99 just to break even.
Well, it almost sounds like because you're concerned about the expenses that they might have to outlay for international expansion, that we don't really know how that business is going to shake out in terms of profitability. I mean, the spend could far outweigh however many subs they get for $12.99.
That is a concern. Look, we've $40 billion of market cap's gone into this business since April. Just to put in the media world context, $40 billion of market cap, that's CBS and Viacom together, assuming they combine, plus some. So this is a lot of additional market cap with a whole bunch of questions we don't know the answer to. They're doing the right thing, streaming, transforming the company, but what the downdraft is, what the real risk is, we don't know a lot yet.
And their package seems extremely competitive with Netflix, at least in the pricing, in terms of what you get for that value of $12.99. But when it comes to some of the other DTC services that have yet to be launched, like a Comcast service, et cetera, where does this put Disney? And what happens to those players who are trying to get a streaming service off the ground themselves?
Well, everybody is priced a bit differently. I think, look, if you're HBO and you're trying to price at $16, $17 above where you are today, and you've gotten, it takes you 30 years to get to 38 million subs, and you've had the mantle of the best programming around, saying you're going to charge $2 more a sub and put Friends into the package against Disney coming in at $12.99 with these 3 channels, that looks like a tough sell for HBO Max. So I think Disney puts itself in a whole different position being able to bundle and price like this. But before you get too excited about streaming, you got to consider just how much downside there is in the traditional business. And being with ESPN and how much of the bundle is dependent on ESPN, the number of subs that come off the traditional package for cable and satellite is going to define an awful lot of the shakeout of, does the growth in streaming outweigh the decline in the traditional business?
Big question. Tom, thank you. Great to see you.
Thanks for having me.
Tom Rogers.
Stud.
Yes.
Tom Rogers, not Disney.
Agreed.
Well, Disney's he's a legend. It's like if there's a Mount Everest,
like a pantheon,
of media,
and
analysts,
especially for us sitting here at
executives.
CNBC. So,
with that said, I mean,
Quick
maybe Comcast. I know exactly what Tom's saying, but maybe Comcast crunched the number and say, you know what, maybe Hulu's a bit of a loss leader. Let Disney have it at a price which they got. I mean, again, I'm not trashing Disney here. I just think it's expensive, and they really have to execute on this whole streaming thing. Otherwise, the multiple doesn't make sense.